Good evening. This is the Elliott Wave update for the S&P 500 for Thursday, March 17th, 2022. Markets continue to be interesting, and we continued to push higher yesterday, albeit a little bit slower pace and without the same intensity, and not without the same intensity that we had seen on Tuesday and Wednesday. Nonetheless, the S&P continues to track what I am counting as best a minute wave to bounce. Now, just to kind of do a quick review, I continue to hold steady, and we really have gotten there very close with today's high being 44.06, almost 44.07, and that next break line as at 4418.75. So we're getting very close to breaking above, which would again revert us over to a different count. And I'm going to review that very quickly for us right now. And again, I'm going out to the 4-hour chart, leaving the highs at that 4808 area. And that was the completion point for minor 5, intermediate 5, primary 5, cycle 5, and super cycle wave 3. So it's quite a level. So what that would, if we break and sustain above 4419, that's going to put us in a position where this wave 2 is no longer valid. And then what happens is I would change this intermediate wave 1 to an intermediate wave A. Intermediate wave 2 would become intermediate wave B. This level down here, which is marked minor wave 1, would become intermediate wave C. And then under all of that would become a primary A wave. What that then suggests is that we are in a primary B wave up. So an advance, a counter trend rally. And what's going to be inside that primary B wave? An intermediate wave A, an intermediate wave B, and an intermediate wave C. So this would change to intermediate wave A, this would change to intermediate wave B, and we would be in the beginning stages of an intermediate degree C wave up to then complete the primary B wave. The outcome remains the same, a crushing decline in the form of a C wave. This way, what we're looking for right now is still a fairly good crushing decline should it begin, but it would be on a minor degree level, completing an intermediate degree level. So it would be a minor degree completing a minor 3, which eventually would come in and complete the intermediate 3. So it would change things around, allow for a continued rise in this market. We would change the fibs and run our extensions from this low to this high and then back down to that low. And that's going to give us higher levels of where this market can go. That's not in place yet. I'm just leaving it out there. That's the alternate view. But we're very close to reaching those upper levels. So I need to include that, because tomorrow, if they pop it again tomorrow and they get above there, I will have to change the view and the count. But for right now, I actually can count 5 sub-minute waves up to that high today. I'm leaving it open, but I can count 1, 2, 3, 4, 5. The market is pulling back off of those levels. And now we've got about 8 minutes, and then Globex will begin, and we'll see what the market chooses to do from there. But they continue to decline and can start moving down below the 8, below the 20. Let me open that up so we can see where they are. Below the 8, below the 20, below the 50, and below the 200, and form a quick 5 waves down. That's going to give a support and confirmation that this completed minute wave 2, and we are now dropping in a third wave. Again, being a third wave, my expectations should be that this thing accelerates to the downside. It moves to the downside. What's going to kick it into gear? As I said yesterday, likely a right hook to the jaw of the market that knocks the market out. And they will just be like, what? Something bad. Whether that's, and it's going to be news generated. Something bad is going to have to knock this market down off of this stage of like where everything is bullish to, oh my God, what are we doing? That's what I think is going to have to happen to kick this into gear. Yes, it can literally just fall in its own weight, because if we consider in 2 days, the market went from 4130 to 43 or 4400, and now has added a little bit more. In 2 trading sessions that got up there, adding today, it got a little bit higher. So actually in 3 trading sessions, it has gone from 4130 to 4407. That's quite amazing. That's quite a big, huge rally. And now that everything's out, I think that the market's going to have a hard time trying to support it up here. To keep that going, to keep that thought going, that inflation is going to be under control. Obviously, we take a look, gold's up, crude rallied back above 103, or almost 104 today. Now, of course, you know, it's starting a little bit lower, but hey, it's back above 100. So what are we talking about that inflation is not going to be under control? What are we talking about? So again, a lot is going on. Now, for tomorrow, unfortunately, we still have to allow for additional upside. Our next resistance zone does not really come in. If we get above 4402, we already have, but we came back below. If we get back above that and sustain it and start moving above 4419, then I'm going to say our next stop is 44, 48 and on up. Now, should that happen, we will deal with it, but we have to allow for that. Otherwise, if the market begins to decline, we start breaking the 8, the 20, and then head down towards the 50. It's going to give a lot of support to this rally, counter trend rally, being complete and not extended higher via a B wave. Because trust me, it will still be considered a counter trend move. The trend remains, in my view, down. So it's a counter trend move. I don't care if it gets up to 4,700. It's still a counter trend move in the form of a B wave. And I will go into that should it occur, and I'll go into more detail about what the characteristics of a B wave are and what we can expect. But for right now, allow for a little bit additional upside. And actually, I'm praying that it doesn't happen, because I really don't want it to break the count up another degree. But it can happen, and we'll deal with it. But if this holds, then I'm looking for it to start to drop, and it should do it more quickly than what we've seen. We'll wait, we'll see. Trade smart, trade using these moving averages. They really are guiding. And unfortunately, on the hourly chart, they are all lined up to go up. They have not started to roll over yet. And it's going to take, starting again, that's the quickness and the speed at which it can break the 8, the 20, the 50 to start to get them to roll over. And if that happens, then we'll be looking for downside. That's where I'm going to leave it for right now. Trade smart, trade using moving averages, use the support and resistance, use the Elliott, use the fibs, and be guided by the price action. That's it for today. Our next update will be on Sunday, March the 20th.